everybody who's joining us here today. I think it's great to see you all. A happy 2021 and a start to the new year. I hope that you're all healthy, safe, and doing well. I'm very excited actually today to have all these esteemed guests to be joining me on the call for what has become a bit of a tradition, traditionally offline, but this time we're doing it online, an investor roundtable to discuss the results of our new report. This time it's called something different. It's the 2021 Emerging Venture Markets Report. Now, why EVM and why have we come up with this new term? This is the first time that we've effectively created a report that goes beyond MENA. One of the things that we noticed in terms of a pain point is that you can't really compare data points, valuations, information, etc., on the MENA region to more developed markets like the US and Europe. And therefore, what we're trying to do is become the reference for what we're calling not emerging markets, because there's many developed markets in them, but emerging venture markets. Those that have similarities in the geographies across the Middle East, North Africa, Sub-Saharan Africa, and Southeast Asia as we continue to expand. And this report for the first time included data from Turkey and Pakistan as we ventured for the first time beyond the MENA ecosystem. And today I'm super happy to have four awesome speakers with us today. Courtney Powell, who's the CEO of obviously 500 startups that can give a global perspective as well as all the regional funds that they have and the activity in that space. Chris Schroederer, who is the co-founder and GP at Next Billion Ventures, but also esteemed author and huge amount of experience in the MENA region, having researched extensively. Basil Muftah, GP at Global Ventures, but also an angel investor, entrepreneur in his own right, and Ataf Awan, that's coming as founder and managing partner from Indus Valley Capital to give a Pakistani perspective. Before jumping into each of the questions and really sharing their insights backwards and forwards on what we're seeing in this space, I just wanted to put a little bit of context around this. So the MENA region, for instance, saw $1 billion, a prediction that we made at the beginning of the year, despite a drop in the total number of deals that have taken place here in the MENA region. Whereas Turkey and Pakistan both saw record amounts of funding in each of their markets, despite the impact of COVID-19 and all the things that we've seen as a result of that. And really, from my perspective, it was a year of two halves, the amount of investment that's happened at the beginning of the year versus what happened as a result of the impact of COVID-19 to the end of the year. And I'd love to hear the investors' views and thoughts on that moving forwards. Just to give a few of the figures. So in the MENA region specifically, the UAE still accounted for both the lion's share of total funding, but also the most active investments in the region, albeit that Saudi Arabia saw the most amount of, the quickest rate of growth for both number of deals and amount of investment. Lebanon saw itself drop out of the top 5 for the first time, unfortunately, in terms of active investments, given the activity that's happened there. And when you look at Pakistan, for instance, $77 million worth of investment was put into the ecosystem for about 45 deals, which was a record for number of deals and amount of investment if you take out an outlier that existed previously. And Turkey saw a resurgence of VC activity with $383 million worth of investment, up 182% on 2019, albeit skewed with 65% of that investment in the 5 investments, largest deals that took place last year. So that's the kind of context and the benchmarking that we're able to put in terms of that. Just wanted to start off with Chris. I mean, obviously, with all of your experience in MENA, your experience in the global venture markets, your experience understanding with billion-dollar ventures, the emerging market landscape, having seen the report and some of the takeaways that you've seen there, what were some of the things that really stood out to you in terms of the data and the insights of the report?
Philip, I can't tell you how much I appreciate what you do and what you've built. I mean, you've been a unique resource about MENA and the kind of pattern recognition that you and others have described so well. So thank you for that yet again, and thanks for including me with this much smarter, much more interesting panel. I mean, look, I think that when I read the report and as I think about what I see around the world, because Next Billion focuses on Southeast Asia, Middle East, Latin America, and a little bit of East Africa, the rise is very real. And I think, as you have underscored, that it's not just the quantity of entrepreneurs that's coming out, but the quality of entrepreneurs, which is at a completely new level, I think, in MENA and beyond overall. We're seeing a lot of global co-investment in these regions, which I think is really worth measuring and watching going forward, because it tends to be an interesting buy signal of where things are going overall. Not so much captured in the report, but I think important to underscore is that the best governments in emerging markets or rising markets are actually leaning in pretty heavily to work with the ecosystem and entrepreneurs and people like you to come up with sandbox ideas and better regulations on the terms of the new technology, which is unbelievable. As you touched on, there's been amazing acceleration of human behavior and adoption in mobile payments and e-commerce and so on because of COVID. But we haven't really scratched the surface yet on key spaces in a lot of these markets. We're in the early days with rising in B2B software, for example. And there are definitely regional buying behaviors, which I'm going to keep a very close eye on, and group buying and things like that. But I think the thing overall that you've underscored, and why I think this report is so important, is the amount of knowledge and experience shared emerging market to emerging market dwarfs, in my view, than the experiences in Silicon Valley. And historically, so many entrepreneurs wanted to hear the Silicon Valley story so they could semi-replicate it or at least learn from it. And that knowledge is still important. But the fact of the matter is, if you sit with a woman who is building a company in Cairo and one in Jakarta and one in Dubai and one in Sao Paulo, 70% of their conversation in the same sector is the same. And it's not any part of the conversation that would come up in the West. And I think understanding those shared dynamics, both from a business development opportunity, but also in a shared learning, metrics, and data opportunity, one, is with us forever. And secondly, I think you really captured it wonderfully in this report.
Thank you. I appreciate that. And I appreciate you supporting us through this journey. Courtney, I mean, when we look back, obviously there was a prediction of $1 billion invested in the region. We hit that, albeit skewed by investments that took place in H1. You've got a very good pulse of kind of the investment landscape, both from the US, here, what's happening in the region, and across your different funds. How do you really see the kind of funding development over the next year to 18 months, given what we saw in terms of the roller coaster of a high at the beginning of the year and a slowdown near the end? How do you see that kind of percolating into 2021 and H1 2022?
Yes, I mean, I think it's been fascinating to just watch the rate of acceleration across MENA, Pakistan, and Turkey over the last few years. I think something that I've been surprised about, which relates to your question, is just we predict, for example, how much capital we might see raised in a particular region, and in every instance, it ends up being significantly more. And so I think moving into 2021 and beyond, I think this time next year, we'll be talking about hopefully closer to the 2 billion mark in terms of the capital raised and deployed here, particularly in the region. I think that not just the investors and the LPs coming from the region, but also globally are really starting to pay attention to the opportunity that exists that currently is underfunded. And so I expect the acceleration in terms of the amount of funds, the stages of funds that are being raised, and then ultimately being deployed back into the ecosystem to be really significant.
Okay, thank you. Basil, we'll come on to your predictions a little bit later, but I think one of the things that actually I heard either Courtney or Betty was talking about is that there's a bit of a domino effect in the ecosystem with regards to VCs being able to raise funds to then be able to deploy them into startups themselves. As investors, and speaking to you specifically, I mean, what's the LP's reaction been as a result of COVID-19? Do you think that we'll begin to see more dry powder and availability of capital for GPs and VC funds? And how do you see the funding landscape evolving over the next 12 to 18 months?
Yeah, go ahead, please.
No, go ahead, Courtney, no problem.
Sorry, I thought you were directing that to me. I'll hand it over back quickly to you, Basil. But just one quick point on that was certainly that LPs have capital that they have to deploy within a particular time period, and at least the reception that we've seen in fundraising is still a lot of excitement moving into the region to stand these funds up. So I think from that perspective, and I'm sure Basil can talk about that more, we have not personally seen a slowdown in the amount of money coming into the funds themselves.
Thanks.
Yeah, no, I agree with Courtney. And I mean, first of all, just want to say thank you again to Magnet and your entire team for the great work you do. And every year that these reports get better and better. So that's one. Two, I'm pretty sure you didn't predict the $1 billion. I'm pretty sure I did.
It's
but
in the
anyway, we can
report, you know, it's in the report. It's in writing that we predicted it, but yes, we did it.
Fair enough. No, but joking aside, listen, we were coming into a bit of a cycle on the funds anyway prior to COVID. Because if you look at some of the bigger funds, at least in MENA, and the amount of money that they had deployed already in 19 coming into the beginning of 2020, they had all started to prepare for raising for a next fund, if that makes sense. So we were coming into a cycle. I don't think the slowdown in the second half of last year is only related to COVID. I actually think we were coming into a cycle, which means, yes, people have been out fundraising. I agree with Courtney. I don't think the appetite has changed. Definitely the fund of funds, whether it's local governments, is still there, if not higher. You know, I would say lots of more family offices are coming into the sector that have been dabbling with bigger checks, for sure. I see institutions like banks starting to say, hold on a minute, maybe I need to get involved, since fintech, I'm sure we're going to talk about that later, but fintech is becoming really a category on its own now. And I think it's the last year of e-commerce in 2020. I think from then on, we're going to see fintech and other sectors, you know, play out in bigger and bigger numbers. So I guess the short answer is to your question, yeah, no, LPs are excited, continue to be. There's a lot of new managers that have come into the market. So they're actually assessing some spin-out managers, as I'm sure you know, with some managers who, you know, were at WAMDA and kind of came out, Noah Capital, and there's plenty of these other examples. And I think everybody around the table is aware of them. So they have more options to deploy with different managers, different strategies. Some people starting to talk about sector-focused only funds. I only want to do fintechs, or I only want to do health tech, or I only want to do things. So it's all signs of maturity at the end of the day, in my sense. That being said, you know, and I know we're going to get to predictions later, but I still think the first half of this year will be a little bit slower, and I think the second half will be a little bit faster or bigger, if you want. That's again my sense, because of this fund cycle and how long it takes to close off the LPs and begin deploying, you know, and do due diligence and begin deploying. It's not the same for everybody, but that's my sense of where this year will pan out over the next year. The only last thing I'll say, and I'll shut up after that, Philip, is it's important to note that we've now crossed $2 million as an average ticket size per transaction. I don't think you highlighted that enough in the report. So we were
in the paid report.
Yeah, it's in the paid report. Very good. Everybody pay for that report. It's important. But I guess we were, you know, if you do the math on the total, you know, we were just 1.7, 1.8. We've now crossed over to 2. That's a significant number for a whole bunch of reasons. And I'm sure if you analyze it by sectors, but to Courtney's point earlier, yeah, bigger and bigger rounds are getting done. That's for sure.
I'll ask the team to share with me with the averages and the median, but I think you're completely correct. Both, I think there was 2 effects, just to put that into 2 things I want to say on that. One, from an investor perspective, I think what was fascinating for me, MENA at least, is that the actual number of institutions making investments in MENA-based startups was higher year over year, albeit a small percentage at 240 compared to 234 last year. But you didn't see a slowdown in the activity of the venture capital space. I think one thing to your point that actually influenced the averages and the medians is a point that I tried to articulate in the forward, and something to also be a kind of red flag is that the accelerator program saw a real collapse in the activity, almost 47% drop in absolute terms year over year, which does somewhat skew the average and the median. But you're right in saying that in both cases, both the median and the average did see an uplift in both numbers. After to really harp on the point of kind of the emerging venture markets, I think Pakistan, for me, both Turkey and Pakistan have shown a lot of interesting things for me as a person and MAGNiTT as a company, because there's a lot of similarities that we see across the markets in terms of opportunities. I think Pakistan, you could almost relate to the MENA region, if not like Egypt, maybe 6-7 years ago, beginning this digital revolution, seeing the infrastructure pain points and etc. And it's almost like COVID was an opportunity because it really helped consolidate the activity that was taking place, not even last year, but the year before. You see this uptick, and really the opportunity is coming out of this. How can you kind of use that and garner that momentum into 2021 and into the future? I guess from your perspective, as you alluded to before this call, what are the benefits of something like this in terms of a report being able to highlight opportunities in Pakistan? And what are you most excited about in terms of being one of the more active investors from a Pakistani perspective?
Thanks. It's super exciting to see you broadening the scope of this report to include Pakistan. And if you look at what happened in Pakistan over the last 2 years, it's really fascinating. And it's interesting that you just compared Pakistan to Egypt 6 years ago. And I think like that was true maybe 2 years ago, but Pakistan has caught up so quickly that actually, if you look at the fundraising, it looks more like Egypt in 2018 or 2019 already, the last year. And it's phenomenal when last year Airleft, raised a large Series A led by First Round Capital, who are investors in Uber and Square. A lot of people said this was a one-off, but since then we've seen Process come into Pakistan, leading by Kia Series B with $13 million. We've seen Finja raise $9 million from Kona Capital and Vostok. And yesterday, Bazaar announced, it's a B2B retail marketplace, a $6.5 million seed, which is the second largest seed in MENA ever, which Global Founders Capital led, and they're investors in Facebook, Airbnb, Slack, so really top tier investors, and a lot of other folks like Next Billion.
Both of you are on the call.
Next Billion coming in. This, relative to the MENA market, I think it's much, much faster that international investors are coming in. And the reason for that is, Pakistan basically lost a decade due to geopolitical reasons, where not much foreign funding was coming in. But all of a sudden, people are looking at the market, and what they see is a 220 million population. And that's more than Egypt, Iran, and Saudi population combined, right? It's 45% of MENA region's population. And Pakistan's consumer spending, it's larger than Egypt's, only behind Saudi relative to MENA region. So it's a very large market and very young. So median age in Pakistan is 23. Pakistan actually has more Gen Z and younger folks than even the US. It's the third largest after China and India. So from that perspective, you're a very tech savvy young population coming up, English speaking, and quickly adopting internet. So you have 93 million mobile broadband subscribers today. We'll soon cross 100 million in Q2. So what's happening is the international investors are seeing that. They're seeing that actually the adoption, like consumer spending, only less than 1% of that was online pre-COVID. It's probably a couple percentage points now, but very quickly it will go to 10, 15%, and that creates very large opportunities. And then the final point, I think, which makes Pakistan a little different from MENA is that Pakistani diaspora, it's actually very well connected. So if you look at Silicon Valley, there was a study in 2016, and they look at Muslims in Silicon Valley, 34% of them were US born, so exclude them. And after that, Pakistan was the largest group, it's 14%. And then you have Egypt at 3%, and Jordan at 2%, and pretty much everybody else is 1 to 2%. So you have more Pakistanis in Silicon Valley than all of MENA region combined. And what that does is it brings all this network effects into play. So that's why you're seeing YC coming in so quickly into Pakistan, all of a sudden 3 deals in a year, going from nothing for a decade. And Pakistanis, which is one of my favorite terms, coined by Rabil, it means returning Pakistanis, and you're starting to see that, and we expect in the second half of 2021, which I'm super excited about. Post-COVID, a lot more people will come back. They'll be starting companies. Already there are a bunch of local funds that have come up. So seed capital is available in Pakistan. What you're seeing is a bunch of global funds like Next Billion coming in and partnering with the local funds to take these startups to the next level. So I'm pretty excited about the next year in Pakistan.
Awesome, thank you. So Basil, just to get you the point, 35% increase in the average ticket size across the whole of MENA, and 150% increase in the median for the region, which is up to 0.5 from 0.2 million. Again, all available in the paid report. But I think what's actually also interesting there, when you start breaking it down by geography, and we did the analysis across the top 5 geographies, the UAE's average was at 5.1 million. Which is obviously skewed by later deals, but you can see that the 5.1 million in the UAE goes all the way down to 0.3 million in Oman. So the divergence of that average ticket across the different geographies that exist in the region is also something that is quite interesting when you kind of understand the different pockets that exist. Jumping in, Chris, One of the things that I've seen, and obviously it's core to our proposition, and I'm sure that you can relate, is when I went to Turkey last year, we did a survey of some of the founders that we spoke to, and 70% of the founders. So when we look at the Turkish market, huge market, very like somewhat similar to Pakistan from a size perspective and a mindset perspective. But interestingly, when they look to expand, they expand out to the US and Europe. They don't expand out to MENA. And I didn't quite understand that. And one of our competitors there, in fact, sent out a tweet and said, right, what's the reason? 70% of the respondents, 300 people, said, we have not been shown the way. We have not seen examples of it, and therefore we don't really know how to go about doing it. And that's one of the things that's very core to what we're trying to build out as Magnet, is that breakdown of information transparency. When you look at the opportunities here, what is it that you see as exciting in terms of building out more regional cross-pollination across these emerging markets? Do you see that happening with time?
I absolutely see it with time, and I think there's a lot of evidence of it now. And it's kind of what I touched on before. A lot of it begins by people just simply understanding that there's connective tissue in their experience. So I think some of what you've seen in Turkey and other markets, like all great entrepreneurs, you go where the friction is least. And so trying to get to the American market historically has obviously been kind of a playbook for lots of people around the world. Germany makes amazing sense. There's a tremendous amount of Turkish talent that is there. You sort of think of it that way. But what I have found is that as entrepreneurs in any given sector are sitting with each other across the world, they are just having these epiphanies of how much is shared. And they begin to think, you know, I'm in Brazil now, but I got to tell you, there are elements of Nigeria that look interesting to me in a way I hadn't thought of before. And because of technology and because of the acceleration we have, it all of a sudden almost becomes cost effective to think about it. Now, you obviously have to navigate all the challenges of the ground, and you can't just fly in and fly out any more than an investor that can fly in and fly out. But this sort of gravity of shared experiences, I think, is opening up particularly new generation people in very powerful ways. I had a huge epiphany almost a year ago to the day. I spent a month in China, mostly in the fintech community, but not just there. And Endeavor Global had pulled together about 17 fintech, not early stage, but growth stage companies from Latin America and Africa and Southeast Asia. And we met with Ant and folks like that. And I watched these meetings where literally 70% of what everyone talked about from 4 parts of the world in China had the same conversation of issues, challenges, and opportunity and how to navigate them. And again, as I said before, almost none of that would have come up in New York or Silicon Valley. And I saw the lights go on and conversations happening among entrepreneurs about figuring out ways to engage, I think, in very new and powerful ways. You still have to navigate the ground, and there's less friction in certain grounds as opposed to others. But I think when you have this shared understanding of experience, shared understanding of how to reach local markets on their terms, you're going to see much more of it going forward.
Awesome, thank you. And just to follow up on that, I mean, from your perspective of all the different markets, what needs to change, or is it just patience and time to see more of the European and American VCs come and start deploying capital within the region? I mean, Atif gave actually many examples of big name US VCs that have invested in Pakistan, and yet in the MENA region, while we have seen case studies of examples of that happening, it hasn't necessarily happened on scale, and yet the arbitrage opportunities of the valuations theoretically should be interesting for them. What do you think is going to be the catalyst for that, or should we even care?
Well, I don't think you should really care, because I think there's more money ever before coming from other places who understand the dynamics of rising markets in very powerful ways. I mean, I think that we have to keep in mind, yes, some American companies have put small checks in places like Pakistan, but the fact is it's still a $77 million, opportunity right now, and success tends to breed success. You see 2 foundational playbooks from the West right now. One is kind of the Sequoia playbook, which is the old playbook, which is you show up and literally build a practice in a market and you kind of go for it, as they've done obviously in China, Southeast Asia, and Latin America and elsewhere. The other playbook is a little bit more like A16Z, which is if I know a great entrepreneur, I know she's amazing, maybe I backed her before, maybe she's from Mexico or whatever, I can partner with one of the blue chip venture capital funds on the ground who I trust. And I believe the TAM can be large enough, and I believe that this could be one of the breakout companies. That's a very interesting way that you'll see success breed success. And I suspect you will see more venture capitalists, not just from the West, but around the world, that are taking that approach, and then we'll just double down and plow in more money. But this is not a story about what you and I would have talked about this a lot 10 years ago. I don't believe this is a story about what is Silicon Valley doing. I believe there's so much capital in so many different areas now that are lighting up to the kinds of opportunity and the speed with which they're moving. that I think this will be something that takes care of itself kind of indigenously and growing.
Okay, thank you. Basil, I want to ask a question that's been playing on my mind for the whole of the last couple of months. A prediction that failed miserably was that last year was going to be a record for exits in the region. And yet, in my mind, I think that given the challenges that are being faced, that there should be more consolidation. Companies that were struggling may have been wanting to merge, but we didn't see that translate. Can you give any color as to why that acceleration slowed down last year? And are we going to see that pick up again in 2021?
I think I can. I don't know. Let's try. But I'll begin by saying that, you know, that's maybe a little bit where I do disagree with Chris on the last question around, we do still need know-how from international investors to orchestrate M&A exits, to orchestrate, you know, how these things happen. I appreciate the sentiment. We shouldn't care. I do agree with that part of the sentence, if you like, what happens in Silicon Valley. But whether it's Pakistanis or Arabs or Egyptians or whatever it is, coming back into the region with that experience, or international VCs coming in, that know-how is still lacking, right? That's still lacking for sure. I guess we can blame a lot of things on COVID, and I suspect it did play a part. So even if conversations were happening on M&A, probably companies were not in a position to complete transactions because, you know, numbers are kind of flying all over the place, and everybody, you know, took a time to kind of reevaluate their businesses. And, you know, there was a good 4 or 5 months there where we all stood still, right? Thinking about, okay, what's happening, and just triaging portfolio more than deploying new money, let alone think about M&A. But I
just
still
very quick. I'm sorry,
yeah.
please finish.
No, I was going to say, but the only last thing I was going to add is I still think, and I don't want this to come off the wrong way, the attitude across the board, whether it's investors, the founders, or just the you know, the capital markets in terms of stock markets and exits that could happen there, if you like, I still think we're not having enough honest conversations. So I've had many conversations this last year with entrepreneurs about, have you thought about merging with another company in another geography that's doing kind of what you're doing? And immediately it's like, well, that's going to dilute me and my percentage. And people don't want to see the pie getting bigger. They, you know, as much as they want to see their percentages changing and cap tables and all sorts of what I think are just, you know, early stage development of people's thoughts, right? I guess a little bit naive is probably the word I would use with it. So I'm still bullish that I still think M&A is happening. I'm hearing a lot more, again, the beginning of this year, like we did last year. I'm hoping there isn't another pandemic or a variant or whatever that slows us down. But I also think there's a little bit of a kick in the, you know, that's needed to get people moving things forward and happening. And with cash running out with a number of businesses that we're tracking, maybe that activity will pick up and hopefully be higher than the last couple of years combined, frankly. But
Philip, just 2 seconds, please. I'm sorry, just to clarify.
Yeah.
I think Silicon Valley is absolutely relevant and unbelievable lessons to learn. The point I'm making is there are other places to learn lessons now. And I have entrepreneurs around the world who are like, great, you know X, Y, and Z in Silicon Valley. Who do you know in Beijing? Because I would like to hear those stories. There's a ton you will learn from Greylock, but there's a ton you'll learn from Kazakh in Latin America now. And so I'm just saying that it's a much broader universe by which people can get that kind of pattern recognition, which I think Basil is right to acknowledge.
And one point I just wanted to add on there as well. I think given just everything going virtual through COVID, I have personally noticed over the last couple of months that we get more inbound questions from Silicon Valley investors and Silicon Valley operators who are now interested in these markets. Yeah. And in fact, Philip, I shared the report with a few. And so all of a sudden, I do think there will be greater interest from you know, from that set, just given the equalization that's now happened with being able to take pitches virtually. So I think that there's still something important to pick up there, and maybe a little bit to Basil's point on the attitude of founders. One of the things that I worry about when I hear about these valuations just rising in such a crazy clip, That makes me concerned, because then if you're at the point where you need to figure out an exit for your company and your valuation is so high that the cap table is just not going to make sense if you pick up somebody else or merge with somebody else. I mean, I think those are still things that are going to need to work itself out in the market in terms of getting enough founders and enough teams who have had the operating experience and the multiple iterations founding companies to know, how best to avoid some of those negative ways of thinking.
I actually wanted to.
Can I tell just a quick story on this one, because I wish this would get shared widely. I've met an entrepreneur who just got recently funded by Mubadala and Arborvest, who I've known for 20 years or so. And he's on his 5th company. He's made a mastery of building, getting to a certain size, selling, and moving on to the next. You don't have one shot at entrepreneurship. That's what I want to say to founders. You right? You don't have one shot. In fact, when you do the first sale, a bit like what Hussam has done, with Namshi now moving into Tabi, the next one just gets easier to raise, to move, to follow, to get what you want. So people have to move, founders and investors for that matter have to learn that the cycle of money is important as much as the value of money, if that makes sense.
Yeah, and I think 2 things. One, we've received more emails and press releases of CEOs changing at companies that have been around for 6 to 7, 8 years, whereby clearly a refreshment of management, and obviously those CEOs then potentially starting their own companies, as well as, I won't point out the name, but one person that told me 2 years ago, I don't think we're building our $1 billion company now. The next company we build will be the $1 billion company, but this has been the learning ground for us to be able to go out and do that. And so I think there's an acknowledgement in the region of this kind of new attempts to build these companies. I do want to allow time in a second for Q&A. So if people have questions, please do share them. Courtney, you touched on a point, but I want to double down on that. For any of the founders that are here on the call, I mean, you've got funds all over the world. Many founders have been apprehensive about fundraising because, well, COVID, are investors investing, etc. As I assume that investors begin to get back to a new normality, I mean, do you have any recommendations or tips for founders that are potentially having to raise funds virtually, lack of travel, that they should be conscious of about the investor mindset when approaching investors right now for fundraising?
Yeah, I mean, a couple of things that I share with our founders who are going into this process. I mean, look, fundraising is never easy. It doesn't matter if you're raising for a fund or you're raising for a venture, you've done it 2 times or 10 times. It's never easy. And one of the things that I encourage founders to do is really just stay consistent in the communication that you're having with investors. So establishing that initial relationship, laying out what your next couple of months are going to look like just from an operational perspective, keeping them up to date on how you've achieved your milestones, and really building that relationship in advance of going for the fundraise. Because then there's just a little bit more credibility built in when you have, venture funds that are seeing thousands of deals every year. You'd be surprised how many people just don't follow up on a regular cadence. So that's a simple thing that I'd like to advise founders. I think the other thing is just being super targeted in your approach, right? You should run your fundraising as a process where the investors that you're going to make sense, have invested in your space before, that there's going to be alignment. So you're not wasting a meeting on somebody who has no interest in fintech, or I guess everybody has interest in fintech, but any other industry out there. So I think just really that preparation, research, making sure you're talking to the right people, following up, and every time somebody says no, just keep going.
Thanks. Atif, before I'm going to come back to all of you before opening up for questions for 3 predictions, rapid fire in a second, but Atif, with an audience now of people listening into the webinar, and we'll be sharing this on social media and wider afterwards. I mean, to the Wapistanis, to the government officials, and to the kind of regional investors, what's the ask from them to see more activity, more awareness of what's happening in Pakistan? And what would you like to see happen to kind of see that continued acceleration? And for one of my 5 predictions of the biggest acceleration of growth coming from Pakistan in 2021. 2021? What would you think needs to happen to see that continue into next year?
Yeah, so what I would say is Pakistan is still super early, right? So if you look at any vertical, it still is largely untapped. It's not come online. There are massive opportunities. I think a lot of Pakistanis, including me, we went to the US because there was a lack of opportunities in Pakistan. You didn't want to just work for a multinational, Procter & Gamble or Shell. If you wanted to work in tech, you'd go to Silicon Valley, you'd go to Europe. And then in the last 5 years, you'd go and work in MENA region, you'd work for Kareem. And what's interesting is Pakistan's strength is its talent. So if you look at whether it's Kareem, whether it's Suhail, Kitopi, a lot of Pakistani talent exists there. And so my ask to Pakistanis is actually now is the time to, if you've been thinking about doing that startup, 2021 is the year. And come and start your thing and join Pakistani startups. And what we're seeing is that increasingly the government is recognizing that that's the way Pakistan moves forward. So you're seeing the regulations becoming more favorable. The SECP in Pakistan, the company registration process, ease of doing business. There are a lot of initiatives happening in multiple departments of the government to make that easier. And in terms of international investors, I think there are a bunch of people on the ground that you can partner with now. So the model that Chris was mentioning, which is the second model, you don't have to wait and do what happened in India, where Sequoia and Excel sort of waited for the first local firms to be successful and then buy out those funds and have those local partners in there. It's just too slow, right? And the markets are moving so much faster now, where lots of opportunities to collaborate and co-invest. And I do want to touch on the Zoom point. I think remote has just become so much accepted. Even prior to COVID, that was happening. So first round capital, when they invested in Airlift, it was the third largest check ever they wrote, right? And they hadn't invested in Asia for over a decade. And they wrote that check without meeting the founder in person. It was over Zoom. This is pre-COVID. And part of what helps is having a local trusted partners. We'd already invested in Airlift, we could vouch for, and the numbers were really, really amazing. But with COVID, we've seen that accelerate. So, again, bazaars around. So I think that's happening more and more. So it's pretty easy way for global capital to get exposure to, a new market, which is super early and it's going to be massive.
Awesome. Thank you very much. That's great. So just in the interest of time, can I go around Courtney, Chris, Basil, Atif? If you got 3 predictions for the venture space across the emerging venture markets that we're covering, what would they be? Courtney?
Yeah, so one, I think entrepreneurship is now an accepted career path across MENA. And I think that's been a huge jump this year and will continue to solidify in 2021. I think secondly, I think we're going to see some later stage funds coming online in MENA. We've got great funds at seed and Series A, but I expect to see Series B and later funds developing. And then finally, I think there's going to be a huge talent war. I think with all the new companies starting and being funded, and really, just that talent pool is gonna heat up, and entrepreneurs are gonna have to get really creative to recruit folks to their team.
Nice. Chris?
Those are awesome, by the way, Courtney. I think first, financial inclusion is just going to be dramatically, hugely increased. The downside is that the juggernauts are going to make it very hard for entrepreneurs because of all the cash and data and talent they have. And of course, every big company thinks they're a fintech company. So that will be a back and forth. Secondly, too much of this conversation, I think there's going to be much more across rising markets or rising market learning, business development and fundraising and partnership. And third, which has not been talked in the whole hour here, but I think we're going to be seeing much more of China in rising markets, but I think we're going to see them being more concrete and not just shopping around in MENA.
Yep. Basil?
Both are very interesting. I love yours, Courtney. I think you nailed some really good ones there, but I agree with a lot of Chris said. And before I give you my 3, we had the best return deal in 2020. We didn't talk about that, right? Isn't InstaShop literally the best return deal, even compared to some of the bigger deals? So, and that wasn't, a multi-billion-dollar or anything like that. 7 million in, I believe, somewhere around there, and 320 out. People should We should celebrate that.
And to that point, I mean, we don't have a Turkish investor on here, but I mean, the biggest arbitrage opportunity has come actually interestingly out of Turkey. For the total amount of capital deployed in Turkish startups, you have some of the most unicorns and unicorn exits for the amount of investment versus exit value. When you look at Peak Games, Zynga, and the likes that have happened out of Turkey, that's a very interesting play. We had the gentleman for 500 that was talking on our call here, and he was saying that what's fascinating about the Turkish ecosystem is genuinely that arbitrage that's existed there. Sorry, Basil.
No, I love those examples, and I think they're good examples of you don't need a ton of money to make it in this business. I mean, we keep talking about size and bigger rounds and so on, but people should remember that, and I think it's just it goes to a testament of entrepreneurship. POs on the U.S. stock exchange from Mina. Okay. I think Saudi eclipsed everything
in 2021,
and I think what
in 2021.
Yep. Okay. And I think Pakistan enters definitely top 5 countries, but even possibly top 3. Those are my predictions.
Very bold, and we have them on record.
I really think that $1 billion thing was me, not you. But anyway, we can get back to that another time.
That's for another day.
No, joking aside, those are mine. I know they're a little bit out there, but let's give it a try. Let's see.
Atif.
So I will say this, this year's country ranking, Emerging Markets Property Group, I know like methodology headquartered in UAE, but it's very much a Pakistani company. There are only like 15 people in Dubai, right? And if you count that, Pakistan was number 2 this year as well. So on to that.
That doesn't work. Come on.
It's a one-off. It's a one-off, but it works.
At that rate, you're gonna claim every company out there.
You guys should work. You guys should work in American politics.
Kareem is a Pakistani company. I don't know. Come on.
No. I think Kareem is different, but like Zameen seems like all founders Pakistani, 90% team in Pakistan. First built product in Pakistan, then expanded. But on to 2021. So I think Pakistan definitely makes top 3, crossing 100 million in fundraising, and we'll have at least 2 Pakistani startups raising 20 million plus rounds. Number 2, grocery delivery startups will be the market to watch, where there's going to be a land grab similar to what we saw in ride sharing. We're already starting to see with Getter raising $128 million. I think it's going to get crazier. And third one I share with Courtney, talent wars. I think talent is going to be the bottleneck, not capital, in 2021, as a large number of companies across the region scale. And as you scale, I think you need that talent both at leadership level and technical levels.
And they'll pay for it.
Yeah. Thank you very much, all. I'm now going to open it up to some of the questions and try and direct them to each of you to try and get as many as possible, if we can try and keep responses short. The first one that came through from Hani, and I'm going to direct it to both Chris and Basil. Really interesting to hear about the optimism of the Pakistani diaspora. Does the rest, well, in Basil and Chris, do you see the same for Mina's diaspora with the same amount of hope and potential? Why or why not? Chris and then Basil.
Well, Basil, you go first, please, if you would.
Yeah, I think it already exists. I think it's on a country level. I don't think it's on a MENA-wide level. So I think the Egyptians with Egyptians and kind of Saudis and so on. But I think that Pakistan has definitely been a unique one because of the number of people who did go to the US specifically for the tech industry and have gone through a cycle or 2 over there with their startups and then returning now. I think Egypt was a little bit behind. Maybe it's related to kind of the revolution and when that took place, and maybe that kind of slowed the whole system down a little bit, and maybe that catches up in that cycle angle. But I can name a bunch of Egyptian who've done successful startups in the States and are now deploying capital or moved back to Egypt and doing that. There's a whole bunch of them. There's lots of good examples. We should talk a lot more about that East-West connection. As a region, we should celebrate it. We should discuss it. I think MAGNiTT should amplify it. I think there's a lot there, more than meets the eye. But I think Pakistan has been a unique story. That's my 2 thoughts.
Yeah, and it follows the playbook of India and Israel and other things in that way. And there's obviously been Tech Wadi, and God bless Osama and for others who really keep fighting this fight. I just think it takes new generation, continued leadership to make it a priority. And I'll be, beating the dead horse again. I think it's not just east to west, but I think there are opportunities for great MENA entrepreneurs to find pattern recognition and ways things are done that are going to be very relevant to them elsewhere in the world. And places like Magnet could be incredible conduits to that. Endeavor could be conduits to that. So I think it's twofold.
Awesome. Thanks. Courtney, question for you. With a lot of regional investors now raising for their next fund, where will the influx of cash come from to fund these funds, given that a lot of the traditional sources, FOs, banks, sovereign wealth funds are seemingly deploying more capital directly, setting stricter terms as LP? I don't know your view on that question.
Yeah, I mean, at least my experience with our own funds is, although there are sovereign wealth funds, for example, who want to get into deals directly, they're still really excited about finding experienced managers to be making those decisions on their behalf. So I just don't know that I necessarily agree with that premise. I think that the money will continue to come, from the institutionals. I also think that family offices are really getting into this game and are interested in seeking higher yields. So looking for venture to do that. So I think it's going to be what we've seen from last year's LPs, if you will, and family offices and even corporates in the region jumping in the mix as well.
Okay, thank you. Atif, is there an untapped sector which will be more important in 2021 than any previous year in terms of industry?
Yeah, I called about grocery delivery. I don't think it's untapped. I think there are a lot of people going after it, but this is still going to be a massive thing. And in Pakistan, it's relatively untapped. So from that perspective, I think that's where there is a huge opportunity. If you look at how much the average household spends on groceries in emerging markets, massive. Like in Pakistan, it's 45%. The range is probably like 25 to 50% across these markets. So this is the largest spend. The unit economics actually works, but better than ride sharing. It's a much simpler model from some perspective. And like if you are the early mover and grab that market and build loyalty, there's very captive audience to be had and monetized over the years. So I think that's the one I'm most excited about, and that's the one that's going to be most fought over as well next year.
A follow-up question from Shakir. When do you feel, one, is there case studies, which you kind of alluded to, but when do you feel that current Pakistani companies scale out beyond the Pakistani market? Will that be in 2021 or will it take a bit more time?
I think it will take a little longer. So Zameen obviously did that, and Zameen is a one-off in many ways. It was way ahead of its time. But what you're seeing at the local, this slate of the companies that are between seed and Series A, now just entering Series B, they're just realizing, like in Pakistan, you have multiple verticals that are worth 10 billion plus annual, consumer spending. So it doesn't make sense to go and very quickly expand internationally and start competing with pretty well-funded startups in the MENA region. The opposite is though true. I think like some of the regional startups that happened with Swivel, I think Utopia will happen. It's happening in the freight market, that MENA startups are coming and realizing Pakistan is a big market, so they're going to come and enter the market. And I think like what Pakistani startups need to do is actually take advantage of their local know-how, access to talent, and actually compete and win their own turf. And then think about, like what are the markets that they should expand into. So I don't see that happening in 2021. I think it's going to be 2022 or beyond.
Okay, awesome. Basil and Courtney, is there any appetite with regional investors to invest in startups that are headquartered elsewhere, example Europe, if those companies are willing to expand to the local markets with a targeted offering?
I think from our perspective, for our regional funds, we tend to focus on either, companies that are HQ'd regionally or diaspora founders. Especially given the fact that we're deploying from multiple funds in almost every region at this point, it usually for us, we stay within the local mandate normally. Okay,
Basil?
Yeah, Global Ventures does have an allocation to invest in international companies that are either moving into the region or have a connection, diaspora, et cetera, to the region. So, we do about up to 20% of the fund is that kind of other category, which this would fall under. So it's not part of our main strategy, but we have flexibility. I believe most funds have that same flexibility to a degree. I mean, just to Courtney's point, 500 Startups has multiple funds, so they would have multiple vehicles to look at things. But for the funds that are in the region, so I'm talking about all the regional players, they should be able to do that. There's usually more flexibility on the LPA, but it doesn't mean that that's the thing that we spend the most time on, right? It's much more opportunistic as opposed to anything else.
Chris, I would be wrong. It's my question not to ask a question. We're now 3 hours and 10 minutes away from a big change of leadership that'll be happening in the United States. But making it specific, while I'm sure we could hear for a long time how that would influence the political landscape. What do you think that will have on potentially the venture capital landscape in the US, and what would that impact would be potentially for regions like ours with whatever may come from that?
Look, it's hard to predict, but knowing the national security and the economic team overall, the priority 1 is going to be COVID, priority 2 is going to be COVID, priority 3 is going to be COVID, and the economy here at home are going to be the main thing. But certainly the way that there's going to be a view of how America engages in the world is going to be substantially different than it's been in the last 4 years. And there's going to be, I think, an embracing, and a lot of people serving this administration who have been very comfortable in the Silicon Valley world and also the global investment world. So I think this will only be an upside. But I think at the end of the day, government doesn't drive this. I think this is opportunity, and I think acceleration has driven this opportunity for investors here and entrepreneurs here to see that this is an enormous world with many different rules now, and they've got to step up and look for those opportunities in different ways than they might have been before. I had a conversation with a top venture capitalist who is about as much like, I will only invest 50 miles from Sand Hill Road person as you could possibly be. And he's looking at company. He actually looked at a company in Pakistan. They're looking at companies around the world, and a lot of that has just been what's happened in COVID. And that's where the driver, I think, is really going to come. I think the government will embrace a new level of openness, but I think entrepreneurs, investors, and particularly a new generation are going to realize the new rules of engagement. Entrepreneurs want to live anywhere now, and they just can't think about it in geographic space. And that will open up more of the opportunity than anything that will come from policy.
Thank you very much. So we have a couple of more minutes. So if anyone has any questions, please do share them, but I'm conscious of time. There's a question here. I think I'll ask Courtney. Do you think the fact that VCs will invest additional amounts in existing portfolio companies to help them recover from COVID-19 will affect new startup looking for funding in the next 12 months?
I don't think there would be a significant effect. I mean, typically the way funds are structured, there's reserves and follow-ons that are kept back for the portfolio. So, given that typical structure, I wouldn't necessarily see that happening. And I think also, VCs will look at, is it really really additional money that's going to bring this, company through this, or was this a natural acceleration of an issue that happened pre-COVID, or perhaps a demise that could have happened pre-COVID? So I don't see there being a significant impact.
Okay, thank you. Shoaib is asking.
I'll just add a small comment. I completely agree with Courtney. I don't think it will have a significant. For global ventures, our fund 2 has a higher reserve rate than fund 1 did. So, but that's a shift from fund to fund. Meaning, if we're supporting a company from fund 1, we're using the reserves of fund 1, and if we're supporting them from fund 2, then I think the lesson learned from COVID is, let's make our reserves a bit bigger, right? So that we have the ability to dig in deeper when we need to. That's the lesson, one of the many lessons of COVID, if you like. But I don't think the criteria for why you would do more follow-on would change, if that makes sense.
Thanks. Atif, what do you think the role of investment syndicates in emerging markets, the likes of Pakistan, Egypt, and the others, has in terms of a role to play?
So I'll broaden that question, look in the context of early stage funding and how individuals and angels can come up play. And if you look at what's happening in the Silicon Valley, AngelList has changed that early stage game. And you have a lot of operators becoming angels, and they initially started with just doing syndicates on AngelList. Now they've introduced, like a very clever way of having perpetual rolling funds where, individuals can just subscribe $5K a quarter. to an operator, and now they can actually, like team up with other operators and basically be that earliest checks. And I feel that's a great learning we should, like pick. And like these opportunities are so massive that the view that you want fewer investors in the market actually is misguided, right? You want as many startups to be happening, and that requires as many investors being in the market. And I think like syndicates and early angel investors is the key to start that all, because like everything happens downstream from them. So if you can double the number of seed startups in any region, I think in a few years you'll double the follow-on capital, because there's too much global capital. It will follow when the companies are ready. The problem is that there are not enough startups, like actually being able to make to those scale targets where the later more formalized institutionalized capital will come and actually invest in them. So I think it can play a huge role, and the playbook exists. So people should just pick it up and run with it.
Look, I think I'm going to end it there. I can't thank you all enough for your insights, for your contributions, for your time during this period. I've learned a lot. I've thoroughly enjoyed it, especially to have all the different divergent views. I thank you, especially for your time during this period. And I hope to see each of you individually, if not collectively, in the months to come, hopefully here in the region, if not elsewhere. I'm excited about the opportunities of covering more geographies, because I think we learn so much from the different markets, the opportunities that exist, as well as the challenges, as well as being able to engage with politicians and the policies that need to help drive all of this, and to see a more holistic market. One of the biggest challenges has always been that the MENA region isn't a big enough market. But when you start covering more geographies and more continents, then the opportunities are endless. So thank you very much for all of your time. I really appreciate it. Hope to see you all soon. And stay safe, stay healthy, and all the best for 2021.
And to you.
Thank you
guys all so much.
Thanks.
Thank you. Take care.